Hello everyone, welcome to today's analysis. In this video, we will take a closer look at the major Forex pairs, including the DXY or the dollar, crude oil and silver, and as well key indices like the SPX 500 and the German DAX. We will also finish with an overview of Bitcoin. Of course, as some of you already know, my main goal is to share some insights into market patterns, many of which are of course harmonic patterns, to support your trading strategies, specifically for those who are learning the first steps trading the financial market. So let's start with the DXY. Many traders yesterday was expecting the violation of this descending wedge. We saw an approach to this fractal support. We have a daily fractal support remains at $1.21, and we have the daily fractal resistance, now a barrier for move to the upside at 101.47. So this is the range that we have for the DXY. We have supported $100.21 and resistance 101.47. So that's the range for the DXY, and we're still inside this descending wedge. Of course, if the price breaks above this descending wedge, we may see an attempt to recover for the DXY, even though I still expect the formation of this bullish crab pattern projected below. I just need to see the DXY printing a new lower low and threatening again a new move to the downside, the breakout of this structure. Basically, I want to see, everyone getting excited with this move to the downside. Finally, the price will break below, completing the crab pattern, and I want to see a reaction to the upside after completing that sequence. Let's see if I'm wrong or right, only time will say, but I need to wait for the formation of that pattern, or I need to wait for at least a clear confirmation of a violation of this daily fractal resistance level. The pound versus the dollar, the cable, it's now facing the 50% Fibonacci retracement level. So this is a minor Fibonacci level. This is a retracement of the last move to the downside. So we are talking about a tiny and shy move towards the 50% Fibonacci level. We have the golden Fibonacci for the cable at 133.85. Pay attention to these levels for the cable. This may trigger, another swing to the downside. I still expect more momentum to the downside for the cable. Not momentum, but at least a move towards the 38-50% Fibonacci level, 132.15. This is the default target for the shark pattern printed above. Euro versus the dollar, we discussed it before, the possibility to unfold into an edge and shoulders pattern formation. I published this potential or eventual pattern before. We expected the formation of the edge and shoulders pattern, failed. I'm not sure why it's not loading my draws. Let me try this way. Okay, I published this as a potential or eventual edge and shoulders pattern. This is a good example why we should not ever try to anticipate a move in the market before confirming the pattern. That's something that can happen to you if you try to anticipate the move to the downside without confirming this specific pattern. Always wait for the violation of the support levels when you identify the potential edge and shoulders pattern, because something completely opposite can happen very, very fast. The market can reverse very fast. Actually, the market can continue the move to the upside without confirming the pattern, and you try to anticipate a move to the downside without confirming that sequence. This is something that can happen to you. So basically, this is a good example of a pattern that you can try to identify, but you always need to wait for the confirmation. If you don't wait, if you try to anticipate a move, this is something that can happen. The market will hunt your stops. That being said, we have what we may call a potential breakout of resistance, a false break of resistance. In order to confirm that false break of the resistance, we need to see a clear violation of this support at 110.65. Only then we will confirm this as a false break of resistance. Until then, the market can stay in range for undetermined periods of time. So that being said, wait for your confirmation. This is a potential false breakout of resistance for the euro dollar. If that confirms, we may see the formation of another sharp pattern later if the price approaches this 109.74. This is something that I was discussing with a friend, but we are far away from this level, of course, so we will ignore this possibility for now. But pay attention also for moves to the downside for the euro versus the dollar, specifically if the DXY, of course, breaks higher. 38% Fibonacci level, that's a level that we are now fighting for the euro versus the dollar, a minor Fibonacci level. Usually that's a significant Fibonacci retracement level to offer support or resistance. In this case, it's offering kind of a pressure to the downside, so I will admit at least a move towards this moving average approaching from below. We are in a 2 hours time frame chart, 200 moving average, so I admit a push towards those levels. Again, pay attention to the violation of the support, which will trigger the false break of resistance again. Then we have the Aussie, completed the bearish shark pattern, 68.61, golden Fibonacci, minor Fibonacci level, now acting as potential element of resistance for the Aussie. I will admit this level may offer some pressure, and again, specifically if the DXY starts to threat the violation above this consolidation process. Aussie, again, 61.8% Fibonacci retracement, now fighting as an element of resistance. The dollar versus the CHF, the Swiss franc, very similar as the DXY, pushed lower, but then back to the highs of this triangle and threatening the intraday resistance level 85.10. That's a minor resistance level, but we still have this major resistance at 85.49 from the beginning of the week already there, and we still have this support level at 83.87 and 83.71, the major support level. So we're still in range, very similar as on the DXY. We need to wait for a confirmation of or a violation of those resistance or support levels. The Norwegian krone, and this is a good example of what can happen for those dollar pairs, specifically the DXY inside that wedge. This is something that can happen also for the DXY and the Swiss franc. If the price breaks above that specific structure, it may trigger a nice swing and strong swing to the upside. Note Fibonacci retracement levels right here, acting as pressure elements. 38% Fibonacci level, 10.58. That's the new pressure element for the Norwegian krone. We should also track a possible move towards the golden Fibonacci extension, and that points to the previous highs, the highs of the right shoulder that we identified before, 10.67. Golden Fibonacci extension level right above. So pay attention also to that specific Fibonacci level. There's a pattern emerging there.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytics. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Dollar versus the Mexican peso. Yesterday we saw an attempt to break below this structure. I thought, and I published it on my previous video, my thoughts about this pair, and my idea was an eventual retest of this daily fractal support. Once the price breaks below this structure, I was expecting this, you know, a fast move towards the daily fractal support, but as you can see, all the dollar pairs suffering the impact of the news and the economic events, and of course the market reacting to the upside, positive to the dollar and reacting to the upside. Basically, the inverted edge and shoulders that we identified before, and I said this was something that I was not trading. I said that before to you. This is not something that I was interested to trade at that period of time. This was something that we tracked before, this edge and shoulders pattern formation, the violation of the resistance level. We expected that move towards the 200% Fibonacci level, but suddenly when the price threats to break this support level, of course you start to, you start to change automatically your mind start to change your views. You start to, okay, probably the market will fall and will retest the lows and will not trigger the hedge and shoulders pattern, and suddenly everything can change. And as you can see, we are now trading the 200% Fibonacci extension level, and the market starts to pull back again once we achieve these 19.66. That's the default target for the edge and shoulders pattern. So that being said, nothing to say at this point. We are very close to the golden Fibonacci retracement level, which emerges right above at 1973. So basically this is kind of we are in a small period of consolidation here. There's a very small lower time frame flag pattern emerging there, so I will admit a move towards these levels, but at this point I have nothing to I don't have any pattern to that helps me identify or get an idea of the next moves for the dollar versus the Mexican peso. Basically it will follow the momentum for the DXY. Probably the Mexican peso will also suffer some of that pressure. That being said, we have also we have also crude oil. Very similar situation as the euro dollar. We have a false breakout of resistance already confirmed, and we have completed a bullish shark pattern at the $68.82. At this point, I expect a move towards the 50% Fibonacci retracement level back to $70.81. That's my expectation for crude after the completion of this shark pattern below $70.81. The bullish shark pattern, it's something like this: a false breakout above, push it to the golden Fibonacci level, completing the sequence, and a move to the upside. Very much the same we are expecting for the euro versus the dollar. Price breaks below the support, wait for a move towards the golden Fibonacci level, and you may see the formation of another shark pattern for the euro versus the dollar. Again, in this case we are far away from those levels, but it's just an example of something that already completed. In this case for crude oil, the bullish shark pattern at the golden Fibonacci suggests a retest of the previous support level, $70.81. SPX 500, as expected, of course, a new breakout of the structure, a new breakout higher. Daily fractal resistance 57.47 already broken. We are moving higher unless, of course, the price starts to pull back and recovers this monthly fractal resistance. If that happens, that may trigger a deeper retracement for SPX 500. Until then, we still favoring more momentum to the upside. Of course, that can also happen. I forgot to put my German DAX on my red list for today, but that's something that can happen, and we discussed this before for the German DAX, breaking the daily fractal resistance 19.047. We are now approaching a Fibonacci extension level. That's a 113% Fibonacci level, which I admit may put some pressure for the German DAX, but even though cup and handle pattern formation, that pattern targets $19,670. So basically there's a huge move for the German DAX, probably to the top of the channel again. But again, I favor more momentum to the upside for the German DAX, but I will not you should not ignore the potential pullback. Attention to this Fibonacci extension level that may put some pressure, as I said, so pay attention to these moves. Always try to identify a decent opportunity or a decent low to buy the index, okay, or the German DAX in this case. Always try to always wait for the pullback. Golden Fibonacci level, 38% Fibonacci level, again 38% Fibonacci level. Always wait for a Fibonacci or a price structure or a support or resistance level to support your positioning, okay? This is not the time to buy the German DAX, in my opinion. You should wait for the pullback, and if the price pulls back, you may start, the market always prints something for you. The market always tries to print or a channel or a wedge or a pennant or a flag pattern. Always print something. Wait for that something and then react to that. So this is the German DAX. I put my coins for more upside momentum, also for the European indices. The BUND, trying to change my chart here. Again, we're still inside this or still above this ascending channel and support trend line. The edge and shoulders remains as a possibility. The time to form the right shoulder starts to vanish when we compare with the time needed to form the left shoulder. So the pattern may start to vanish with time, but even though it's still possible to see, if the price breaks the support levels, you should pay attention to this move to the downside. Of course, as I said multiple times during this week, we need, and the last week also, we need to wait for the confirmation and the violation of these fractal levels. Weekly fractal resistance 135.45. That's the major resistance level that we should consider. If the price breaks above it, we should see an attempt to retest the previous highs and the monthly fractal resistance level. Let's finish for today with the Bitcoin, and I still believe there's room for more upside momentum for Bitcoin. I have patterns projected above, not because of that. I don't create expectations for momentum based on patterns that I projected above or below the price. It makes no sense. This pattern always this pattern only will be valid if the price actually approaches this 113% Fibonacci extension. Until there's no pattern to trade, there's no momentum to follow, unless you have, of course, in consideration the price structure. And in fact, we are in a bullish momentum for Bitcoin, so I admit more momentum for Bitcoin based on this, but also based on this expanding triangle that Bitcoin starts to unfold here or starts to form. So this pattern may call, for a push to a new high, breaking above the resistance level of this expanding triangle, kind of. And so and for that reason, I favor more momentum to the upside for Bitcoin. Always pay attention to the patterns. If that happens, it may be limited to this level, $66,744. So this is the 113% Fibonacci extension level, and this is a level of pressure for Bitcoin. If the price approaches these levels, I will admit short on Bitcoin towards the 38% Fibonacci level. And just for you to give you an idea of the dimension of this trade, we are talking about a move towards 61,318, and that represents nothing more than an 8% move to the downside from the completion point. So pay attention also to this possibility for Bitcoin. I believe there's room for more momentum to the upside, but even though, pay attention to this bearish alt-bat pattern that we projected before. Something that's popping to my eyes at this point, we have kind of a lower time frame edge and shoulders trying to unfold here for Bitcoin. So also pay attention to the support. Always pay attention to the support level, not just because we have a an head and shoulders starting to unfold, but this can actually unfold into an head and shoulders pattern, so pay attention to this support level. A move towards the moving average approaching from below. We are on a 2 hour time frame chart. Will not be a surprise without completing this sequence. Of course, if the price approaches these highs, we'll invalidate the head and shoulders, but that's something to consider also. A lower degree head and shoulders pattern for Bitcoin, support at 62,682, a move towards the moving average will not be a surprise. Even though, pay attention to these moves, more momentum to the upside is my expectation, and then pay attention to the formation of the bearish alt-bat pattern. That's all for today. I hope you enjoy and take some useful information from the channel. If you do so, press that like button, subscribe, and press that bell in order to get my notifications. That's all for today. I hope you enjoy it. Have a nice week and safe trades for you.